Live.
Hello, everybody. This is your lowdown time. It is Friday, and you're with Squawk Box. Hong Kong's latest retail sales numbers missing street expectations. The April data showing an increase of 11.4%. That was a comeback from the previous month, 17% we saw in March. The administration here warning that uncertainty could hurt consumption. That's what they're paid to tell us. But that it expects a strong labor market and tourism to continue helping with sales. In other words, they have no idea. Who is going to buy the London Metal Exchange, the LME? Well, reports say that the last two potential suitors outlined bids to the board of directors. Earlier, bids from the ICE, the Intercon Exchange, and of course the Hong Kong Exchange and Clearing are thought to be around the price tag of, give or take, $1.9 billion. The London Exchange keeping silent after the meet, but reports say the two were asked to return. Analysts say that means the LME is maybe bidding one against the other, holding out for as much dosh as possible. And more loans going sour at ICBC, the world's biggest bank in terms of market capitalization, says that the NPL ratios, bad loans, could edge up to 1.2% this year from something like 0.97 last year. Small, mid-sized enterprises thought to be behind the bad loans, but the chairman insists the overall risk profile controllable. But some analysts are raising some red flags and alarm bells on bank revenues, saying that as China's economy slows, more companies will likely default on their borrowings. Our next guest helps SMEs navigate an uncertain terrain. Andrew Tananbaum, Executive Chairman at Capital Business Credit, or CBC, joins us from the United States. Andrew, good evening to you. What exactly is it that CBC does that the banks already on the ground in China can't do and haven't been able to extend to the SMEs?
Well, first of all, by coincidence, I'm leaving tomorrow morning to fly to Beijing to meet with Chinese banks, foreign banks, and local SMEs to explain and to further develop our supply chain finance solutions for exporters from China and importers in the United States.
Andrew, what exactly is a supply chain financial solution? I understand what a supply chain is, but how do you actually get involved and provide the working capital needed to pay the bills on a month-by-month basis?
Well, what we do is, since many of the Chinese suppliers are shipping what we call an open account to the U.S., they have to wait 30, 60, or 90 days to get paid by their U.S. customer. And it's our responsibility to see if we can provide liquidity on the date that they ship those goods to the United States, thus accelerating their cash flow anywhere from 60 to 90 days.
Now, Andrew, on the other side of that equation, you're telling U.S. importers to make sure that their suppliers in China are financially sound. Why? What are you seeing, and how can a U.S. importer find out if their supplier is sound? What's the solution? How do you go about doing that?
Well, I've been doing this for over 30 years, and one of the most important things that I've noticed in my long career in trade finance is the buyers and sellers know each other quite well. There is not very few, if any, U.S. buyers who don't travel to Asia to meet with the factories, go to the factory floor, see of the capabilities of the factory, and have long-term special relations as to quality and of their the products that they're buying. So I think that goes a long way to realize for the buyer and seller that they not only have to buy and sell goods, but they have to help each other out financially when things are tough or when one needs liquidity.
Yeah, that could be advice that the big banks in China could probably use as well. They haven't really been playing ball with the SMEs when it comes to giving them loans. Are you seeing any improvement on that front?
Well, I can only speak to the clients who keep finding us, who say, listen, I need to discount my receivables because I'm bumping up against a credit line or a credit limit with my local bank, and this would be very helpful for us to prime our next turn of inventory.
Andrew, is this something that the Chinese want? I mean, do they like seeing somebody like you going in and filling a gap that's not being provided locally? It can't be very tasteful for them. Aren't they supposed to find their own domestic solutions?
Well, I would say to you that this has been going on for many, many years. It's just that our focus now on the SME is rather different than that it has been for years. We are now in market with offices in China talking to the suppliers and identified by us in China or identified by their import clients in the United States. So I don't think that it's a question of being distasteful. I think it's finding an additional solution for people who can't find incremental liquidity.
Andrew, are you more nervous about the risks of doing business as it pertains to China right now? Before we brought you onto the program here, we're talking about Industrial Commercial Bank of China, ICBC, that big Goliath in the banking space. I mean, 1.2% NPLs as a proportion of the total aggregate loan portfolio is not anything to get all bent out of shape about. But the fact is that it is challenging, and more loans are going sour. At least that's what they're flagging to us. Are you experiencing the same thing on your front?
Well, we're actually not lending money in China. What we're actually doing is buying the receivables due from U.S. customers, which is our basic core competency, is to underwrite the U.S. credit risk. As long as the goods are shipped by the supplier, we're ready to step in and help the supplier get paid sooner. So our risk is the U.S. buyer, and we try to, we do go and meet with the suppliers, but essentially our risk is if they can make the goods, they want to get paid faster. That's our core competency.
Okay, great talking to you, Andrew. Very interesting angle on an uncertain situation. Andrew Tananbaum from Capital Business Credit, CBC, in what looks like a beautiful Thursday evening in New York.